Gold bullion rallied from near three-week lows in London trade on weak US jobs data Wednesday, but failed to regain the $2,500 level after prices in the metal's number one, consumer China, suggested the weakest balance of bullion demand over supply in 3 years. Global stock markets, meanwhile, extended this week's miserable start to September, as China's services sector PMI survey for August showed growth slowing hard. But US equities opened flat from Tuesday's sell-off as betting jumped that the Federal Reserve will make a sharp cut to interest rates in 2 weeks' time, following today's news that job openings in the world's largest economy fell to the lowest level in July since New Year 2021. The JOLTS figure was lower than all estimates in a Bloomberg survey of economists, says the Newswire. Layoffs, meantime, rose to their highest since March. Jobs data and the unemployment rate for August are due out this Friday. Overnight in China, gold prices had fallen to the heaviest discount versus London quotes since June 2021 at the equivalent of $11 per troy ounce, coming after the Shanghai gold premium set record highs in late 2023 and then averaged an incentive for fresh bullion imports of $35 per ounce over the past 12 months, more than 4 times the typical level of the past 2 decades. That suggests weak demand in the precious metals' number one mining, importing, and consumer nation. London's 10:30 benchmarking auction saw gold set its lowest AM fix since mid-August, but the spot price then rallied $27 per troy ounce from its morning low of $2,472, peaking less than 90 cents beneath the $2,500 mark. Tuesday's 2.1% drop in the S&P 500 and 3.2% drop in the tech-heavy Nasdaq saw volatility in US stocks jump by 1/3, while crude oil fell to new 2024 lows, and the US yield curve re-inverted after briefly ending the bond market's recession warning for the first time in 2 years. Shares in US semiconductor manufacturers yesterday sank the most since the COVID crisis of March 2020, led by stock market darling Nvidia as the world's second most valuable listed company lost a record $279 billion of capitalization, a drop equal to the annual economic output of major Peru. Given that NVDA sank by 9.5%, even before news broke that it has been subpoenaed by the Justice Department's antitrust team for possible monopoly law-breaking, what's most alarming about all this is that the best explanation anyone could offer was the date, says the Points of Return newsletter from Bloomberg columnist John Authers. September is historically the worst month for the US stock market, says Authers, cutting 1.2% off the S&P 500 price index on average over the past 95 years, according to MarketWatch. Gold in US dollar terms has meantime risen in only 2 Septembers since 2011, losing 0.04% this month on average over the past 2 decades. Go for gold, urges US investment bank Goldman Sachs commodities team, now slashing 1/3 off the bullish call for 2025 copper prices, which they made in May, as the industrial metal jumped to new all-time highs. With the price of gold already 1/5 higher in 2024, as copper sinks nearly 25% from that peak of 4 months ago, imminent Fed rate cuts are poised to bring Western capital back into the gold market, says Goldman's, a component largely absent of the sharp gold rally observed in the last 2 years. Yesterday's stock market slump failed to spur new inflows of investor money into either the giant SPDR Gold Trust or the number 2 gold ETF, the iShares products. Trading volume in COMEX gold futures and options contracts, in contrast, jumped by more than 1/3 to the heaviest in over 2 weeks. Silver in London trade today rallied 50 cents from yesterday's 3-week low beneath $27.75 per troy ounce, but platinum prices dropped to $901, the lowest since late April, before rebounding by $10 per ounce, while palladium hit a new 3-week low near $930, before adding 1.5% in London trade. Following the JOLTS numbers, almost 1 in 2 bets on the Federal Reserve's September meeting now sees the US central bank slashing the cost of borrowing by 0.5 percentage point when it meets a fortnight from today, up from fewer than 1 in 3 at the end of last week. While activity in China's services sector continued to expand in August, the pace of growth badly missed analysts' expectations, with the slowdown leading to some firms to cut staff according to the Caixin/S&P Global PMI survey. Please like this video and subscribe to our channel.